Yeah, I'm losing my edge.
Expectations after stock falls, Pete. Stocks fell last week. I want to get into what that means for the week afterwards because it doesn't happen very often. We talk about 50-50 theoretical chance that the stock market rises or falls every minute, every day, every week, every year. Mm-hmm. But in reality, in actuality, that's not the case because the stock market actually rises a fair amount more often than it does fall here. Right. So I wanted to zero in on last week's fall of, I think it was about 6.5% when all was said and done we're looking at the small stock 75 for today's segment, /SM75 if your futures use the / just SM75 if not. But I wanted to look at this because, Pete, this happens about, looking back over the last several years, it happens about 3 or 4 times per year that the stock market sells off more than 5% in a week. Does that sound about right to you?
Yeah. I will take out the outlier years. And yeah, absolutely. I would say 5% plus. Yeah, I would say.
Because that's a pretty big, like that, when you see S&Ps or small stock 75 or NASDAQ, especially recently, rising by a percentage point or sometimes 2 percentage points every couple of days, you would think that a 5% down week came along more often, that it was more normal, but it's actually abnormal. It's almost like a 2 standard deviation occurrence here, only happening, like I said, 3 or 4 times per year, which equates to just 5 to 10% of weeks in general. So a pretty decent abnormal or outlier move. And so what should we expect, Pete, moving forward for a stock market that's coming off this semi-rare occurrence? We've looked at the bouncing effect from day to day. If the stock market was down yesterday, it's more likely than not that it's up the next day. And we actually see an average move that's pretty significantly higher. What would you expect here out of a stock market the week following a 5% fall?
I would expect it to see a little bit of recovery.
Okay.
Because
I had the same expectation too.
And we actually saw something different. I guess, how do you gauge recovery? I would have said for the 5, you'd see 1%, so at least 1% higher. And I would even, if pushed, I would even say a little bit more. At least some point during that week, not where the week went out, but some point during that week, you would have had an opportunity to take something off.
Well, so there you go. You see, Pete qualified it there and he saved himself, because I expected the same thing, where I was like, if we saw a 5% down week and the stock market more often than not moves higher, and the average move for a stock market every year is about 7 or 8 percentage points, then I would expect 5% down week to be met with at least 1% or 2% or even 3, or even a full recovery the week after. But no, on average, we actually saw no real change from the average. Like all weeks, this is what I'm talking about, the drift higher, the more often than not moving higher. But what we usually see as a trend in the stock market bounce, or whatever you want to call it, is after a big move lower, we tend to see this big move higher, but we didn't really get it. Like I was expecting to see, an average of 0.2% higher on all weeks. And after a big sell-off like this, an average of, like you said, Pete, a percentage point or even more than that higher. No change there. But how he saved himself here was he talked about, maybe it doesn't, if from Monday to Friday last week, the market's down 6.5%, maybe Monday to Friday this week now, it doesn't close up 3 or 4%, but you said at some point up a couple percentage points, and you nailed it, Pete, because what we did see is that range more than doubles the week following a big stock market fall.
I would have never thought that. That's really interesting.
And this owes to a couple of things, right? Like when we see volatility heighten in options markets, or just movement in the stock market, it tends to have this clustering effect, right, Pete? Like we don't normally see a 5% sell-off, volatility enter the stock market, and then it just evaporate. And then it's like, we didn't even know that 5% sell-off happened last week. This week, it's very boring. you see volatility kind of roll on top of past volatility here. And that's what we're seeing here is not necessarily a big bounce in the stock market, but a huge increase in the trading range.
Yeah.
And you nailed it with that comment, Pete. And we've already kind of seen it here on Monday afternoon. We saw the stock market as
Right.
high as, I think, 2%, maybe even more than that, higher just on day one of this week following last week's fall.
Right. And you know what? And that's what we're talking about too, is I think we can't reinforce this enough, is this 5% down move. I mean, everybody who had a bias to the downside, I didn't have enough, or usually it's, I didn't have enough or didn't have any.
Yeah.
And that was my bias. I think this speaks to the fact too, that there is always an opportunity to redeploy that bias. The question is
Sure.
at the bottom of the 5%, I think we can argue, if you have a long-term horizon, maybe you can make that case. I don't think that's in either of our blood to do that. But if the bias is there and you do get the reflexive reaction, that short-term balance back into the market, that's your opportunity to manage your contra-trending trades or to deploy your bias again. So, if you think about that, these moves and this is what I like, they provide you two-sided opportunities. What I mean is you can play this from either side and then enhance the types of occurrences and the number of occurrences. And I think that's really important.
Yeah, I love that you set that out, because most people would love to see this number here be plus 3%.
Right.
And just like the notion is usually, and this is for all humans, myself included, is excuse me, I'm lazy. I want to do whatever's easiest. And so the easy thing would be, after a 5% sell off, the stock market tends to be up 3%. And so you can just lazily buy it and then walk away from your screen, and that's it. Unfortunately, that's not the case here, but you outlined it perfectly, Pete. Okay, we don't have the bounce after a week like we saw last week, but what we do have is this increased range, which tells me that, okay, the expectation is plus 15 cents higher by week end this week of SM75. That's not enough for me to just buy or sell the market and walk away from it. But I know now that the range is pretty wide on this. And like you said, Pete, if I wanted to be short the stock market and I missed last week's move, well, what's great about it is the range here. I could see 51, 52, or even $53 in SM75 at some point this week. If I wanted to buy, but I think that this isn't low enough, I could see all the way as low as $45, even lower than that in SM75, given historical action. So, it's a matter of, you didn't get the easy trend, the thing that you could lazily just go to your platform for 2 minutes, click one trade, and that's it. But what you do have is a solid amount of expectations for this week following last week's stock fall, and the ability to do anything. You want to be short. There was already opportunity today where SM75 was up, like we said, over 2%, gave you a huge bounce to get shorted. Now it's reversed some of that. You want to get long? We'll see. I am positive at some point this week, we will see a move lower that'll allow you to get long at cheaper prices than they currently are, because all we're doing is banking off of this, the expectation that volatility will be greater.